Faced with stubborn inflation that has raised concerns about where policy is headed, the Federal Reserve has been ensnared in a holding pattern that likely will be reflected when it closes its meeting Wednesday. Markets are anticipating a near-zero chance that the Federal Open Market Committee, the central bank's policy-setting arm, will announce any change to interest rates. That will keep the Fed's key overnight borrowing rate in a range targeted between 5.25% minus 5.5% for what could be months, or even longer. Recent commentary from policymakers and on Wall Street indicates there's not much else the committee can do at this point. Pretty much everybody on the FOMC is talking from the same script right now, said Guy LeBas, chief fixed income strategist at Janney Montgomery Scott. With maybe one or two exceptions, policymakers pretty universally agree that the last few months of inflation data are too warm to justify action in the near term. But they're still hopeful that they will be in a position to cut rates later. The only piece of news likely to come out of the meeting itself is an announcement that the Fed soon will reduce the level at which it is running down the bond holdings on its balance sheet before bringing an end to a process known as quantitative tightening altogether. Outside of that, the focus will be on rates and the central bank's unwillingness to budge for now. Officials from Chair Jerome Powell on down through the regional Fed bank presidents have said they don't expect to start cutting rates until they are more confident that inflation is headed in the right direction and back toward the 2% annual goal. Powell surprised markets 2 weeks ago with tough talk on how committed he and his colleagues are to achieve that mandate. We've said at the FOMC that we'll need greater confidence that inflation is moving sustainably towards 2% before it will be appropriate to ease policy, he said at a central bank conference. The recent data have clearly not given us greater confidence and instead indicate that it's likely to take longer than expected to achieve that confidence. Markets actually have held up pretty well since Powell made those comments on April 16, though stocks sold off Tuesday ahead of the meeting. The Dow Jones Industrial Average had even gained 1% over that period, with investors seemingly willing to live with the prospect of a higher for longer rate climate. But there's always the specter that an unknown could come up. That likely won't happen during the business portion of the FOMC meeting, as most observers think the committee statement will show little or no change from March. Yet Powell has been known to surprise markets in the past, and his comments at the press conference will be scrutinized for just how hawkish of a view committee members hold. "I doubt we're going to get something that really surprises market pricing," LeBas said.